So very warm welcome to all of you for joining today's discussion. I was just showing you that if you are having any trouble with the NSE charts or Nifty charts, largely because of the exchange agreement, it has nothing to do with your trading rainbow setup or some other setup also may not work. So basically, you have to fill up the exchange agreement and state that you are a non-professional user, like you're not a fund manager, investor for others, or trading on others' accounts, then it will work just fine. So, where do you find the agreement? When you click on this delayed, wherever it is showing delayed there. Now we are going to take a look at the Nifty overall situation. First, we take a look at the level of risk. My chart got disturbed because of this data connection. So first, because risk, I believe, is the one of the most or possibly the single most important factor in the market. So currently I can see in the weekly chart of with the line this chart that it remains broadly in a Dow structure, broader, but some turnover was there, and if I count every turn, then it is somewhat no longer bullish. But if we really pick the important Dow structures, then it is still somewhat bullish in the weekly chart. Overall risk, I can see it is not significant, but rising and elevated in the weekly chart. So upcoming weeks and months, there can be turmoil. This is I look at every day, every week to understand the market risk. Once again, I'll have to do the adjustment on this chart. Choose the risk master. And now in the daily chart with the Dow structure, you can see that market is turning bearish. We are having lower high and lower low. So it is clear from overall line chart in the daily that the equity market ka main index Nifty 50 is no longer that bullish. Also, there are always downturn every moment. Which downturn is more important, I understand by looking at the level of risk. So risk aversion is the smart money, means not betting aggressively on equity, maybe still going on, but in the more stable names, or where there is price action, momentum, and trend support. And drawdown risk is here rising as well. But overall equity market remains safe. That means risk is more towards India right now. As global overall we are safe, that means there will be market like Nasdaq or Japan, which are still be going up and making into record highs. The risk is not significantly elevated. Of course, we are in a recessionary cycle that I've said, and cycle is different than what I will say is recession directly. Recession is the part of the cycle. So there is also a risk of major down. Now, after this bounce back, which we could see and also see there is no new Dow structure. That means market, we call it range bound as the lower point is not broken yet. And previous swing high was broken. That means it is neither bullish nor bearish, but in a range and risk remains significantly high. So short term market is, overall equity market is not out of the drawdown yet. but overall equity as an asset class remains safe. Now, after I have measured or taken a look at the risk, I go and look at the overall Nifty situation starting in the weekly chart where it is now having the correction after the bounce back. That means breakout failed almost. And if it does not come back within 2 weeks, there will be a very higher chance. Now, once again, it will be in a range. Once again, those who will be going for the blend SIP, and since they are not making much of money from September, October 2024, the longer it goes, it becomes tougher for the passive investors who are still range bound for a very long time. Even if they have done the SIP during the fall, overall their return is still in a very range bound fashion. This is a higher risk where the passive investing fails, whereas inflation can take away our money, value loss. These are the times when going into different multi-asset or multi-opportunities into across the global may do us or help us to do better. In the daily chart of Nifty, I can see there is a sell signal which I have seen for last time discussion, but also highlighted looking at the probability meter. Let's make it large. Sell trade win probability is just for now projected around 11%. So not a very strong sell signal, which is very much accepted or expected rather in a rangish market. So Nifty may not be bullish and bearish tilted. It is not significantly bearish. Now I'm coming to the 125 minutes chart, which is for short-term trading. After the bounce back last time in my Sunday storm, which is usually free to join, in the storm I highlighted there is also a chance market will probably likely to go up, which it did. There was also a chance it can fall and remain bound, then rise. Many possibilities. This was one possibility, it bounced back. And I had cleared up, I'm not interested in the buying. The first bounce is not a good one to go for. And once again, I had this expectation that, okay, it may also turn to the lower side, which is a turning. So short term, it is remains significantly bearish. Sell trade win probability is the highest with the range bound possibility at 36%. Now I'll go to the option master to see what is the option master is suggesting. In the 125 minutes chart, I will prefer to do the option master for my style. So currently, the trades I will be looking for, it's not yet ready for me fully, as white cross outside is giving me a warning in my setup. So I'm not mega bearish yet. So I will look for, and I'm remaining on bearish trades already. So my outlook in the short term will remain towards bearish, with the expectation that it will take at least around another week probably to really see whether it can break the last 350 area. But I'm open to any possibilities. As I've said in the past many times, I don't know future. And this chart does not show future. This chart shows the present, like all charts. So rather than focusing on future, I try to focus on the present situation. And then I think what are the possibilities, and then I take a trading decision. So currently my preference will be towards bearishness, but I'm unsure of the level of aggressiveness on the bearish side. I think some little more time waiting will be better for bearish trade itself. Then we can have a bigger chance to break down towards 25,000. So 25,000 area in the upcoming weeks has been included now in my possibility. Nifty 50 chart is a good one when I'm talking about derivative or a general index or equity market. But to stocks, if you are interested in the stock part, then you better look at more deeply and in the Nifty 500 chart. I will make the lower meter, strength meter bigger. I hope it fits. Almost it did. Nifty 500, I can easily see that it is having the similar type of correction as the Nifty 50. So broad market is under correction. This should not mean that in my portfolio, which I think stocks are still good, but just undergoing the correction in line with Nifty, I'll not be aggressive on exit. But those where the real momentum turnaround happening, those I will not prefer to remain. Along with Nifty 500, I can see the lower strength index is showing where the strength is. We have seen the small cap the weakest in the previous discussions, including Sunday stock storm. This is the Nifty 500, sorry, small cap. It was always more bearish. This is nice. Nifty is getting ready. Nifty, if I look at the mid cap segment, so far it has been the strongest in the latest round. And whether my momentum is structure, some further up move cannot be ruled out. So full section of the market is not bearish. Looking at the lower meter, just a moment. I can see consumer durable, healthcare, PSE is not among the strongest right now. Some strength comeback I can see in the IT segment. I want to see which are the stocks, not necessarily jump into. Trading decision, more time taking we take, it's better. We are thinking. Energy. Infrastructure is where I can see some strength based on weekly chart, of course. Here I can see metal, which has been stronger and still rising. Private banks have been stronger and rising. There may not be new entry points, but this was discussed way ahead. Not today we are seeing the result. We just looked at the market. I did not know that PSU bank and private bank would go up. So overall market situation, there is some strong correction. So wherever the weakness persists, I'm not sure how this one. Let's look at particular one stock which was good but lost strength along with the auto segment has been the Maruti. So in line with the market, this one has shown strong weakness. Whereas if I look at another stock, VSSL, it is also started to undergo another weakness. That means I'm seeing in my setup two double weakness. But if I look at a completely different picture where the strength is a Federal Bank, I see still strength persisting. And even if this stock say today down just because market is down, sometimes looking at the PNL, you may feel the emotion to press exit to the full. But that should not be the case. It should be taken individually. And it will be a good idea if I want to remain right now where the overall broad index is going under a correction, Nifty 500. Sorry, this is more Nifty 50. Let me type correct one. But similar will be undergoing similar correction. So as overall broad market is under correction, those will strong we can hold. And once it's come back into strength, if it does, and if those stocks, likely those which are strong stocks, they will once again start rising up faster. So like a gardener takes care of the stocks, it is your job to overall keep look out for your portfolio, and those which are showing strength you remain, those are showing weakness you re-evaluate first. What is influencing this broad market? Okay, this is a shallow correction, but it will come back. So this is the scaring period. Now we have to differentiate which stocks are scaring, kaun sa dara raha hai, and which one is really weak, where the risk is. So differentiate between the scare and the risk. And that means each stock considered individual. So that's all, friends. Thank you so much for joining the discussion. If you have any question related to the Indian equity market, we'll take it up just after our 1 minute blackout.